A big misconception that I see all the time is a lot of people think that certain investments are only for certain accounts. And a question that I've gotten more times than I could count over the past 20 years is, well, what can I own in this type of investment account? Or can I own X inside of this investment account? Many people think that an individual account, a traditional IRA, a Roth IRA, 401k even, can only have specific investments inside of it. And that's just not the way that it works. In reality, you can look at it as that the accounts are containers, and then the investments are what go inside of those containers. So the account titling, the way that the accounts are set up, that is for mostly tax classification and funding rules, what you could put into it, and how the money is treated when it comes back out of it. Investments are what allows those accounts to grow. For the most time, for people, for our clients, they will own the same fund or stock across the board in all of their investment accounts because it's what we believe in at that time. So just to break it down a little bit and explain what I'm talking about. You have account types and you have investments, completely separate. Taxable accounts can be an individual account, which is, you can look at it like a savings account, money you have after taxes and you fund it. That's taxable account. Individual accounts and joint accounts. You can have an IRA, which can be a pre-tax IRA, like a traditional IRA. Maybe it's a business plan like a SEP or a simple IRA. You could have a Roth IRA. You could have a 401k. So these right here are just the titling of these accounts. Taxable accounts, that's when you deal with capital gains taxes when you sell the position, even if you don't take the money out, but if you're making a trade and something's appreciated, that's what you'll deal with there. Traditional IRAs is all pre-tax money. So when you pull that money out of the IRA, it's going down as income for the year. Roth IRAs, which we love, hopefully you meet the qualifications, so that money is completely tax-free when you withdraw it. 401ks can have both. They can have pre-tax money like an IRA, and they could be a Roth. They could have a combination. But the point to drive at is the type of account is simply how it's titled and how the IRS is going to look at that for tax purposes. Once you have this set up, you look at the investments. That's what goes inside of the accounts. I know this might sound basic and simple, but again, a lot of people don't realize that regardless of what type of account you have set up, it doesn't always dictate what you can own inside of that. So in an individual taxable account, I could buy the same stock. Let's say it's Apple. I could own it in an IRA. I could own it in a Roth. I could own it in a 401k. Same thing for a mutual fund. Same thing for an ETF. Same thing for a bond also. In a taxable account, that stock, let's say you buy Apple at 100 and it goes to 200. When you sell it, you're faced with capital gains taxes. Could be long-term, could be short-term. That's one tax rate. If it's held in your IRA, you can buy and sell 1,000 times and there's no tax consequences. The money is only taxed when you pull it out of the IRA and it goes down as income. That's all pre-tax IRAs, whether it's, again, a SEP, a simple, whether it's pre-tax in a 401k. One thing to realize, a lot of people say, my retirement account, I don't want to be active, I don't want to make any changes. But we believe it's better to buy and sell if you're going to first make a trade, or maybe you own a position in both and you want to lighten up and sell some. It's better to do it in the IRA because you're not paying taxes until you take the money out of that account. Roth IRAs, again, if you're above 59 and a half and you meet a few other qualifications, that money could be completely tax-free. So the main point I'm getting at is don't be confused about, well, I have this type of account set up, what can I buy inside of it? For the most part, 99% of the time, regardless of what you have set up, you're able to own any type of investment that you want to grow for you. So remember, the investments don't need to change, but how the money is treated when it flows in and out of the accounts do. So you definitely want to understand the different rules about each account that you have set up and make sure that you're setting up the account that makes the most sense for you. To sum it up, good financial planning is not only about what you own, it's about where you own it. And then it's about the decisions you make around all your positions together when you're looking at all your different accounts and all of your different holdings. So again, this was not a complex video, but I felt it was important to go over this topic as I do get this question a lot from people, and I wanted to hopefully help simplify it. So you understand that one is about how your account is titled, but then the investments are completely separate. And for the most part, you could put all those investments into any account regardless of how it's titled.